Box color alerts are just a fantastic way to search quickly for different types of conditions. You can search for identical indicators, like if you're looking for gaps. You can search for location patterns. You can search for shape patterns. You can search for divergent patterns. This is all accomplished on the radar screen with different indicators that have been created. There are 8 master indicators that are identified in your documents, and you can they're located. Examples like this video is located under the radar screen on the web page in the 4th column. This particular video is on the location patterns, and there are actually more than 8. We've consolidated a couple of them, and we are working on a few more that will be coming out. But right now we have the big ones that will identify the different conditions that you might have in a particular situation. As you know, on the radar screen, you can only put 30 indicators on inside the radar screen at one time. However, what you may not know is that, for example, when I click on the header up here, it turns these indicators into a yellow condition. Into a blue and pink condition with the headers turning yellow. And you can see that all of these all of these columns that you see are one indicator. If I move this over one, you can see that the red and the green, those 2 columns there, are a different indicator, and moving them back, we can catch the other indicator over on the right. So this, I'm not sure how many columns there are. This is all one indicator, but it has multiple columns, and this is the location patterns indicator. Inside of this indicator, over on the left, we've thrown in 5 columns for shapes, and it's just a quick reference point when you're matching up different locations with different patterns. Because as you become familiar with the system, you will realize that certain locations generate, or let me rephrase that. Certain shapes will go together with certain locations to generate gaps. And that's not always the case, but it's a condition that tells us that there is a possible gap. And so when you're looking at the indicators, and you can again, you can add as many indicators in this thing as you want, and you can glance through quickly glance through 300 or more indicators in just a few minutes, looking for different aspects of conditions. Each, for example, in the location pattern, when you have a red text, it indicates it is down. When you have a green text, it indicates that the line is up. When you have a green box, it can be a cross above 0. A red box is a cross under 0. And then in the shapes patterns, a BOC higher is a solid green box, and a BOC lower is a solid red box. Right in here, we have a solid green box and another one down below. And we did this because obviously a BOC higher pattern is stronger than a BOC lower pattern, whether it is at the top of a cycle or at the bottom of a cycle. And so it just depicts greater strength. When you have the power when you have the power green and power orange columns, for example, right in here, those when you have a green box, it is above 0. When you have a red box, it's under 0 in each of these two columns. A BOC pattern is a dark green box, and a TOC pattern is a dark red box. And the crossover in these two columns is a yellow box, and a cross under is a blue box. For example, we can tell that on the line above this one, in the power green column, we have a blue box on LTXB, and we know that that is a cross under 0, so it is heading down, obviously. And there's just it takes a while. We have general themes running through all of the indicators. For example, the pink is typically in the right leg W pattern family, and when you have a light pink or a dark pink, it can be a right leg W higher or a right leg W lower, depending on which pattern that you're looking at. If you have regular green and dark green, they are typically like a BOC pattern, and then the dark green is a 2-day BOC pattern. But the greens go together when you're looking at indicator shapes. And so obviously you can see that the location patterns move very little, because we're just a few minutes after the open here, and they're not moving much at all. If we back up one, we have the 7 short-term trend lines, and these are depicted in 5 columns. I've used the trend yellow in the far left column as the indicator to watch, simply because that's closest to 0, both above and under 0. And so we don't need the other two. We just these 5 columns represent the 7 short-term trend lines, and it is a quick reference point to tell you what is happening with the short-term trend in the particular stock. For example, the very first one on top has 5 red boxes with it, and we know everything is going down. So in all likelihood, it's not going to be a very smart idea to buy long in that pattern today. And I mean, it's really a quick reference point, because I think most of you are aware that the 7 short-term trend lines are a powerful method of identifying what the particular direction of the price is and how it's going. Remember, the trend trio, yellow, pink, and blue, move faster than the other 2 groups, the power green and orange and the swing red and green. So just an excellent system of master indicators for quick reference. And the other thing is, keep in mind it's live. This is instantaneous on the radar screen. The other thing I was going to point out here is I always use the interval the last column, so in other words, that's the price of that particular stock at this point in time, and I use the shares column, which basically is an ability to set, like say for example you want to trade $10,000 each time you pull the trigger. Well, then you can set that amount in this column here to tell you how many shares you can buy at that amount, and you can quickly glance at it and identify what you want to buy. Netflix, for example, is number 3 here, and you can buy 58 shares of that stock with the level of that I have it set at. And I didn't double check, but I oftentimes just keep it set at $10,000. There are many more sophisticated ways to do this shares column. You can attach it to your account and give you what your account balance is, so that you can know how much you can trade. But that's not a very effective way of doing it, because you simply are not going to invest your entire account on one purchase. And so whatever your comfort level is on the number of stocks that you, or the dollar amount that you want to invest, this shares column is a really quick way to identify and keep yourself balanced in risk for the purchase that you make. So the other thing I'll quickly mention is on the back end of this, I have the 22 market force recognition indicators. And these are individual indicators. You can see when I press the header, only one of them lights up. We simply have a huge amount of information in each of these, and so the only effective way we could do this was to create individual indicators. You can also get a lot of this information in the shapes pattern radar screen indicator, which is on another video. But so what happens is these 22 create 22 individual columns or indicators within radar screen, and then you can add a few more to that, like I've done, like the location patterns and the 7 short-term trend lines, and then the other 3 columns, interval, last, and shares. And so you can set up to 30 and identify with what's going on. I mean, it's exciting when you can match things together. And primarily, one of the best ways to identify matching location and matching patterns is to track your gaps in the Excel program. Set up separate Excel programs for specific needs. I mean, you could have 10, 20, 30 different ways of having individual Excel programs to identify how shapes and patterns are related together when gaps occur. And you're going to see correlations between them, and when you do comparative analysis in that way, it's just a fantastic method to then be able to take that information, and when you see a certain particular shape, like a BOC pattern, along with a specific location, then oftentimes those two together will create a gap up or a gap down, depending on your particular where you are. But that way, it just it makes a quick reference point for you to identify conditions within individual stocks, and you can literally search 100 or 200 or 500, whatever your system will support, based on the indicators that you have running. Because keep in mind, it takes a lot of power on your computer to run 50 or 60 columns of information and not crash. I mean, it's you'll discover that you'll have a capacity based on the system that you're using, and then of course you can take 2 or 3 monitors and set them up, and you can, again, depending on how many particular symbols you want to run, you could literally have 3 monitors running across your desk on your desk, and you could be looking at all 3 of those columns and simply pressing on one of the numbers over here. Like I pressed on number 7 right now, and it shows us a different layout, but I do that because number 6 is Microsoft. So when I have 7 outlined here, everything above that line is Microsoft, and that can be, you can do that across 3 computers, or however you would like to do it. But this is the idea that you have in the radar screen. It's just simply a fantastic way to quickly search for just a number of things. If it's identical indicators in the 22 market force indicators, shapes, there's another pattern on divergence. There's another radar screen on divergence, which is which is one of the 2 most powerful ways of determining gaps, or determining strength in the movement. We know that a BOC lower pattern is weak compared to a BOC higher pattern. And if you get a BOC higher pattern on a peak, you've got a situation where the vast majority of the time the bulls have pushed the price up way beyond what it should have been, and it's going to go down the next day. Now, it certainly could gap up the next day and then go down, but again, we're typically not buying or entering positions until the next morning, unless, of course, you're dealing exclusively with gaps. Then there's other discussions for those issues. But that's the idea that we see on the issues that are associated with this particular radar screen. And this was primarily the locations pattern radar screen, and I dovetailed that with the 7 short-term trend lines, and of course the 22 MFR indicators on the back. So that's it for this video. I hope I shared the significance of what these radar screen indicators are, because they're just a fantastic tool. They're created so that you can use a system in very quickly, basically instantaneously. You can start working the system without having to build these indicators and create these radar screens. And so there's just a lot of power to this system. And above all, have fun trading.